Hey everybody, Brian here from quantlabs.net. In this video, I'm going to show you the stock picking process that our system goes through, this AK-47 when it generates. We'll include in as part of this the quant analytics service. So if you watch the videos on government, what I call government data, and the indicators that show the best performing growth over the next, let's say, month or a couple of months based upon the momentum over a quarter. The next step is what we're going to do is we're going to go through what sectors within either the UK or the US look good to make bets on. Trading bets, pair trading, spread trading. So we're going to pick out of those sectors the best performing sectors, a long and a short in each one. And then we're going to add them to a watch list. So that'll be a separate video. But this video, including this one segment, I'm going to show you four samples, four samples on top of another segment later on after this first segment that you're watching. That will show you the back end of the database and how the database works, how the database is structured, and how we can track and measure different stocks from different regions in the world and also break it up by category, or pretty well I sometimes call it a market sector. Okay, so let's get to it. First, I'm going to just show you Greece and the results of what doing a search on Greece brings back. This is one example why I don't use Europe. Now, I know Greece is not the best example, but here, typically all the spreadsheets will have the ticker, the full name, the country it's from. Usually it's going to be UK or US. And then we also have some statistics as well. The mean, standard deviation, the skewness, the variance, and then we get into fundamental analysis. Okay, we look at the current EPS as well as the EPS for the next quarter and the next year and the next quarter. Okay, now you may be asking, why are these zero? Well, that's because when we are pulling off of Yahoo, these stocks don't offer this data. So what they're basically saying is that the companies that issue their guidance, specifically on earnings price per share, the current, next year, next quarter, that's a good red flag saying maybe it might not be worthwhile to invest into these companies. So that's why there's zero, because they don't report it, and as a result, it does not get reported into Yahoo. So this is one of the big reasons why we don't deal with Yahoo. Countries like Greece and pretty well all the major countries in Europe are like that. Just these stocks are probably too small. We also track trying to capture market cap. Now, all these are collected in this spreadsheet. Just these are part of our risk assessment parameters that we use to see which trading pairs are worthy of trading. As you can see right off the bat, these are not worth trading. We can't even capture the market cap of these stocks. Typically, you want to trade companies that are going to be at least a billion euro, a billion US dollars. They don't get reported here. Okay. Now, that's another big red flag. Now, we also capture the ATR, average true range, over 5 day, 20 days, 60 day, or 250 days. Basically, these are a week, a month, a quarter, and a year. Okay, so we can measure that. Also, what we're looking for here is guidance on how the company feels about their outlook. Here, we're looking for how big are they in their sector. Here is the implied volatility, which is used to measure potential liquidity, the open interest on who's putting bets on these companies in a month, a quarter from now. Usually we do a 30-day outlook, but because of implied volatility is zero, guess what? They don't have option data, so Yahoo's not tracking that, so we can't capture that. So that's why you get implied volatility of zero. Now I'm going to show you some other examples as well, but this is a typical spreadsheet you'll get. You won't get the Greek one or any of the European ones except for UK. Because when we do these assessments, there are some companies that do report back things like their guidance for the EPS, earnings price per share, and we can also get the volatility because they have options for their particular stock, as well as we can also capture their market capitalization, their market size, and how they relate to the sector as a whole. Okay, so that's the first spreadsheet. Now let's look at some of the other spreadsheets here that we got. Now this is a system. This AK-47 system generates these sectors and these spreadsheets only for purposes of we're interested in this sector because there's growth in them or potential growth. So that's why we're doing this tabulation. So let's take a look at the apparel stores as another example. These are just randomly picked by myself, okay? And again, there's another segment I'll show you how we are able to track that data from within our database, okay? So if you want to watch that, watch the next segment within this video. So here is the entire same thing, but for apparel stores. So there's 34 stocks to choose from. But these are better. Of course, we get these are American. If you want to know the exchanges that they're on, again, all that statistical information, mean, standard deviation, variance, skewness. Now, again, some of these stocks do list their guidance, as you can see here, and this is a really important factor. Here's the thing: when you see an EPS of -42. That's not a good sign. What you typically are looking for are EPS that are fairly high, because that shows how strong that company feels in terms of their guidance over the next year, over the next quarter. Okay, so this is a major strong risk indicator that we can use from the company themselves as how do they feel about the market and about how they feel about their place in the market. And that is a very strong indicator of how they feel in the direction of the stock. When these EPS numbers are not met a year from now or a quarter from now, they will get pounded badly. So you're always going to be looking for the EPS of the highest. The higher the better it is, that means you're more confident. Okay? Market cap is another one. Again, another test for liquidity. What we're typically looking for that's a good measurement are these companies like this is Abercrombie and Fitch, over $1 billion market capitalization. Okay, that's important for liquidity purposes. Liquidity, it's huge. And here's another one, Ross Stores. Okay, so again, we look at the ATR. Okay, over the next 5, 20, 60 day, or 250. Again, some of these don't have options. Maybe the small players, I don't know. Who knows? Could be a bug. But we're trying to calculate that implied volatility for these particular stocks. Because we're using Yahoo data, we have to calculate our own implied volatility, and we're using Black-Scholes formula for that. Okay, so I'm going to show you some examples of what we typically would go for. I think my two examples are using this spreadsheet and another spreadsheet. So I'll get to those in a second on the outlook. All right. So we've looked at the apparel stores. Now let's take a look at this closed and fund debt sector. Okay, these are defined by Yahoo Finance. Okay. Okay. So now how many are we dealing with? This one's quite a lot. 87 or 87 stocks to choose from. Okay. Again, we can see we got in this one we got BlackRock Municipal in there, some other BlackRock Income Trust. So they're broken out as separate companies listed on here, the New York Stock Exchange. Okay, so again, we got a statistical. We have our EPS. The only company really measuring that is the Stonegate Mortgage. But again, these are just random sectors we chose. Okay. Again, we've got our ATR and our implied volatility, which there is none, but I'm just showing you various examples. There's that one. Okay, let me show you another one. Okay, so we got building materials, general building materials. Okay, let's see. We've got 24 companies to choose from. Here's some of the companies we're dealing with, some big names, and you can usually pick out those big names because they'll have the EPS, right? So a good examples here, obviously not good. Look, this company's been pounded so badly, this China Advanced Construction, they're not even offering any guidance at all. Not good, not good, and these are definite red flags to be on the lookout for. But let's see, there's probably some other good ones that we could choose. Doesn't look too good. This one looks okay. Martin Marietta Materials. Again, their guidance for the next quarter is not too bad. That's probably the strongest one. And again, our system's going to be able to hand pick which ones are good. And you'll be notified of that. And I'll probably even show you a video on that report. But this is just the crust of what you could use. If this is not very useful for you, all this data, this would probably take you hours to compile. Just for one sector, this would take you hours to compile. Both the statistical, the EPS, the market cap, ATR, and most of all, the volatility. That's pretty hard data to get to calculate the implied volatility. And we do have this working only for those companies that are listed as that do have option data that we can calculate from. All right, so what was that? Let's just say we were to hand pick just visually here. This one here, this MLM, they look strong. There's probably a lot of good short plays to choose from. Probably this one would be a short. Nortec, their guidance doesn't look too good. All right, so that is that in terms of different examples on what you can get. So I've shown you apparel, general building materials, and this clothes and fun. These are just, again, random sectors. So let's check out some examples. So what I did was I just wanted to see what would happen if we did some spread trades. So this one would have been Genesco, and what was the other one? GCO and Aero. I think these companies are apparel. Let me just make sure. GRO. Let me just do a search on that. GRO. No. Well, let me just show you. Let's just say our system did pick out this trading pair. Okay. So you could say here in June. But look, let's just say the system caught this here, okay, that both these stocks were at equal value, okay, the equal price. But over time, we'd be able to measure as the spread got narrower, and we probably would have cashed out somewhere along here. But yet again, even let's say we waited till sometime in September here, early September, and we calculated the current spread is here. It could widen. The more it widens, obviously that's more profit potential. Just showing you that, okay? But here's the complicated part. Here's another pair that we could use, MLM and PGM. Maybe that's a good example. So we did mention MLM. I think that was in the other spreadsheet here. Let me just pull that puppy up. Yeah, that's apparel, so we want this one. But there's various conditions that can go against you. So this is MLM. So why was this chosen? Well, it looks like it has probably the strongest guidance, with the EPS being the highest among the group. And then the other one was right here. So we're here, November 21st, 2014, where the red is PGEM, which we would guess is the short, the MLM, which is our long. So let's see what happens here. So we have MLM that we've talked about, but we're looking at PGEM. 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 Where are you? PGEM. They're right here. Okay, so their guidance is not too bad, but that's the current. Maybe there's something worse. Yeah, maybe this NTX. Let me just see where that's at. Okay, I'm just doing this on the fly. I'm going to get rid of this guy. Okay, so we're gonna add, again, this is what was it called? NTK. Okay, let's check that out. NTK. Let's see what happens here. Okay, so we've got MLM here. At right here, the green is NTK. So right here would have been a great place to put some cash in and deploy. And look at the spread. So that would have happened about 3 weeks ago. So if we held on this position, and let's just say in reality, okay, we chose these two as our spread opportunity, okay. Now in the next step, we would add these two to a watch list, and we'd watch them, and we'd wait for opportunities like this, maybe this kind of cross, to say, hey, let's trade this. This looks good. And as a result, it would measure when to put the position on, and then it would watch the spread and try to do a calculation on when the spread's at peak, and then get out for the close to maximize your profit potential. Okay, so I'm gonna try to show you that in the watch list video on what it does. But you can see there is probably a movement here. Look, this is the volume right here when they cross. Funny enough, there is no volume here. A little bit here. So people are doing this. I don't know if this is in an automated fashion or not, but these are just real world examples that you can use for trading ideas, and that's what this spreadsheet is all about. It's just to generate trading ideas and adding them to a watch list, where we use that watch list as our nerve center to watch when to put on positions. So be on the lookout for that video. And if you want to know the mechanics of it, I've got that pretty well described both in my blog and in my YouTube channel, Quant Labs, on youtube.com. All right? Hopefully this will help you out. And stay tuned for the next video segment in this video. Have a good one. Hey everybody, Brian here from quantlabs.net. I wanted to show you a couple of queries regarding our database that we'll use as part of stock selection. So in this case, I'm just using this bar chart, trying to find out today's hot top best stocks for today. So there's this one called Raw Stores, Autodesk, and I just want to like I've shown this before in the database, but it's just so anybody who's new wants to understand how our stock selection works. Okay, so essentially we have a database running Postgres. I mean, if that really matters. Let me just save the query here. Okay, it doesn't matter. So what I'm going to do is I'm going to show you how many databases or how many stocks we have listed in our stocks table. And this is all courtesy of Yahoo. So we have about 14,000. This is globally. So they're all categorized. I'll show you the database actually. Let me just pull up a query here. Good example would be, let's say, something like this. I'm just trying to think how to do this. Okay. Let me just show you all the apparel companies. Okay, so we're going to focus on apparel. All right. So we have 47 companies worldwide that are part of this category of apparel. Now let me just show you the list here. That's the count. This is all standard SQL for querying databases. But here's the entire set of companies globally that are tracked by Yahoo. So we have USA, Singapore, Hong Kong, some global players, Germany, blah, blah, blah. Okay? So out of that, we can obviously break it down by country or even categories. So we're just dealing with apparel. Okay? So let's say we have apparel as our hot category we're interested in. We can analyze it by US, Hong Kong, whoever, by whatever country we want. And we can query on anything of this nature, even by the exchange. So in that case, we are dealing with category 730. On top of that, I'm just going to narrow it down to the country. So in this query, same one, but I'm just adding the US, okay? And I'm just going to show you how many stocks we're dealing with. Okay, so we're dealing with 33 from the US. So we could run our script from MATLAB for that and do all the stock analysis. So these are the companies we're dealing with. We're dealing with Nordstrom, Guess, Luxega, sorry, Chico's, so on and so forth, the children, whatever, okay? But in there we have this Ross Stores. Now remember, Ross Stores is our hot one that we want to track. Now, that one is ROST in Yahoo, okay? So this is Ross Stores. And again, we can grab this data through our MATLAB script. So in that case, let's just do that. I got a script here, so I don't have to retype everything. Let me think here. That shouldn't be too hard. So we want to grab, I don't know, we'll just do and ticker equals ROST. This should just bring up our Ross store. So here's our Ross store. So because we have this kind of capability to query, we can do that within our MATLAB script and then run our MATLAB script. So I just want to show you roughly the advantages that you have with the database with this kind of power. And of course we have other tables as well. Just so you understand how it works on the back end. Talk to you later.